Welcome back to WealthWise. I'm your host, Jordan Kimmel. And as promised, we're always bringing on different ways of looking at the market, we're going to show today a really interesting data source, one of the paid sources that I use. And we'll look at some actual income generation using options. We're going to talk to John Dobosz from Forbes, who runs some great newsletters over there. But what I always like to do is set the stage for WealthWise. I look at the market through magnet eyes. What does that mean? It means looking at individual company level, not sector, not ETF, but really looking at earnings, looking at all kinds of fundamental data, looking for the best in each industry and each market cap. That's what I love to do. That's the portfolios that I run. But I also want to talk about, the health of the market. Where are we? So while a lot of people continue to just bank on the Fed or hope on the Fed or watch the Fed for rates, what I think is way more important is looking at what's the health of the market, what's the advanced decline line, new highs and new lows. And I got to tell you something, this market is hitting new highs. It's doing so with some warning signs, folks. It's doing it without the participation of the full market. We actually saw yesterday the advanced decline line of NASDAQ look terrible while the index is now hitting new highs. So there is something, it's a very crowded trade. That's the expression I use. I don't have to name you the seven dwarfs or the Magnificent Seven, the Magnificent Three or One. We know it's an extremely crowded market, but rather than be the naysayer, what I'm sharing is the overall new lows don't look bad. The market itself looks healthy enough, but you have to have a good game. What we're seeing in this earnings environment, winners are being rewarded like we've really never seen, and the losers are being taken literally to the woodshed. And so there's no remorse, there's no medals for third place in the stock market. And one of our commentators, as we build out the MarketWise and the newsletter, one of our contributors is going to be Louis Navalier, a dear friend of mine. And he loves to say these days, hey, it's every stock for themselves. And never has the market meant it, more than this. So what I'm saying is, we have companies right now in genetic engineering. We have, the largest airplane reservation company in India. Leave it to Magnet and leave it to our model to find companies that are growing fast, but doing at a discount. We do own a house full of names you'd know, but we also love to discover before the institutions get there. So my wrap is, it's fairly sunny out. There's some clouds on the sky. Don't let the naysayers scare you into cash. There's great ideas. You just have to really be careful to use data if you're going to play the individual stock market. So that leads me to a break. It also leads me to share that we're going to have on MarketGrader next. MarketGrader is a service I use, and it's a service you might want to take a look at. So we'll take a real quick break. We'll be back with more MarketWise, more WealthWise right after this.
Ready to up your game and learn more about the thrilling world of sports betting? Introducing Double Down with Breslow, the ultimate podcast about the business of sports gambling. Join me, James Breslow, and a long list of expert guests as we dive into the art and science of the sports betting industry. Evolving regulations, technology enhancements, and the meteoric rise in the number of players makes this sector the fastest growing and most intriguing in the world. Unlock the business secrets from many of the industry's most recognizable C-suite executives, including famous odds makers and influencers. Every episode of Double Down with Breslow is packed with insider tips, deeply skilled analysis, and in-depth discussions. Don't miss out on the ultimate resource for mastering the business of sports betting. Listen to Double Down with Breslow on the Evergreen Podcast Network or wherever you listen to podcasts. That's Double Down with Breslow, the business of sports betting podcast.
And welcome back to WealthWise with me, your host, Jordan Kimmel. And I've shared in the past that I look at individual companies through data. There's other ways of looking at companies, and one of the most respected and some old friends of mine, we're going to bring on right now, it's MarketGrader. This is David Lucterhand from MarketGrader, a service that I'll share that I've paid for, I'm paying for right now. It's an alternative ranking system. But David, first of all, thanks so much for joining us.
Jordan, thank you. The opportunity is all ours, and appreciate it.
Well, let me share too that, Magnet and Facts are two of my models, the way I look at things. But I've approached you and Carlos Diaz, who runs the company, or founder. And what I'm interested is in other companies and other ways of looking and ranking the market. And you guys not only have a ranking model, it's very international. You have indexes benchmarked on it. And we're going to actually take a look at the online data that I use that you offer. First of all, David, thanks for joining us, and share, if you will, maybe a little bit about your background. I know you've been there for a while, and what MarketGrader is really all about.
Well, thank you, Jordan. This is my third career. My first career was as a member of the Chicago Board Options Exchange and the Chicago Board of Trade, where I traded both commodities, financial futures, etc. I then spent 15 years working for the United States government, setting up the capital markets in Russia, Kazakhstan, and Central Asia, and lastly, Ukraine. And then I joined MarketGrader 15 years ago, actually leading Ukraine, really at the when we went through the mortgage crisis, which in effect bankrupted our moral authority to tell others what to do. So I had known of MarketGrader for a number of years. I always thought that I would end up here, and did. So it's my pleasure to be able to talk about it after all these years. So as I say, it's third career. If I could, Jordan, let me just start out by saying we are a GARP house, GARP, growth at a reasonable price. It's baked into the DNA of MarketGrader. And I'll very quickly share my screen and show you a little bit about what it is that we do. So hopefully you can see the screen. And logging in as if anyone were. And I'm going to very quickly go through what we call the components. We have a number of different tabs at the top, and I'll just go to Stock Rater, which is typically where most people end up to begin. And as you can see, this is a map of the world. We cover almost 41,000 stocks globally. And we look at them, again, as I mentioned, through the lens of growth, value, profitability, and cash flow. In this case, if I just click on a country, I can click on France, or I can click on, and I'm going to see all of the countries, and all of the companies underneath it displayed by market cap with our ratings. And I'll describe the ratings here briefly. But since I'm sure a lot of your clients are interested in the United States, I'm just going to go there. And as you can see here, we have economy type being developed, our grade breakdowns from sells to holds to buys. Our market cap covers pretty much the universe, as well as all the sectors. And as you can see, everything beneath here is actually in market cap. Notice the pink. I can reorder all of this based on the ratings and so forth. But let me just click on one company. Let's go, for instance, a client called me today and actually asked me about a company that I thought was interesting. And I'm putting it in here, Powell Industries, just to give you an example of how we do this. So first of all, we grade from 0 to 100. So anything above a 60 is going to be a buy, or displayed in green as it is here. But between 50 and 60 is a hold, and below that will be a sell. We also have a short-term indicator, a sentiment indicator, that helps people to understand just exactly for short-term movement, 30 to 45 days, what the market is doing from an emotional standpoint. But other than that, MarketGrader is a fundamental quantitative house, and that's how we look at things. So the four key components for us are growth, value, profitability, and cash flow. And with each of these components, we have 6 indicators that for a total of 24 altogether.
Right. Do me a favor, David.
Yes.
Click on the quadrant. Quadrants are really nice.
That's where I'm going, exactly where I was going with that, because this summarizes basically all 24 indicators and the 4 components. And you can readily see, for instance, if this particular stock, Powell, which is an industrial stock, were rated 100, this quadrant would be 100% blue. So if you see a lot of white, which I don't here, but if I saw a lot of white, let's say in value, that would indicate to me that the stock is expensive and there really isn't a lot of value at its current price. This is telling me something different. This is telling me that this is equally weighted between growth and value, which is a very nice portrait, which is one of the reasons why the rating is so high at 86.3, for example. We also, if I can get into the financials just here quickly, we're also going to be looking at the financials, again, through the lens of growth, value, profitability, and cash flow. I like to talk about growth because very quickly, which is, again, part of how important it is for us, the growth versus value aspect of it, the quality being what we call quality GARP, the quality being profitability and cash flow. But you can see here that we can look at here are the numbers on the left side. The screen's a little tight to be able to show you all of this, but
right.
I can click on up here. What the numbers are telling me on the left side, I can see displayed in basically charting form on the right. It gives a nice picture. Here's the earnings surprise history, the light green being what was estimated.
David, let me interrupt just to keep us on track here, for the time allotted we have. People can see an enormous, literally amount of detail regarding every company. Let me share, one of the ways that I do things that I use your service. And so if you click on watch lists, right, what the market grader also does up on the watch list itself on the top tab.
Oh, up here. I'm sorry. Okay.
Yeah, that's okay. So what I love to do is look at your watch list, and they do things like companies that are priced to perfection. They may actually be a short, or
well, you're going to find that in
a pullback.
That's in ideas, Jordan.
Okay, so I'm sorry, that's in ideas.
Right.
So what I will do, David, is I go into these different lists, your ideas, and click on any one of the ideas, whether it be large, small, growth,
Well, let's look at price to perfection. We have a number of them on the right side: improving fundamentals, declining, cash kings, market leaders. But you mentioned price to perfection. It's an interesting one. Let's look at it. I'm clicking on it right now.
Right.
And here we have, I've got a number of companies that are priced to perfection. To get on this list, you have to have a growth spread of 10 or more. We don't have time to get into that right now, but that's one of the qualifiers. You have to have positive sentiment, which we do in this particular case. And we need to be relatively close to the 52-week high. You can see NVIDIA is right there. You can see, let me find another company. Lilly is right there. And basically what we're saying about these companies, Jordan, is that these are great companies. They have done very, very well. But in order to continue to grow, they have to do everything perfectly, which means they can't miss their earnings estimates by a penny or two.
Perfection.
Right. That's it. So this list is something I tell people to look at carefully.
Right. And on every one of your lists, I just want to point out too, up on there's a CSV file, or you go to Excel and export it. And then what I do is it's right. So right over there, I go to this list or all kind of your watch list. I export them into Excel, and then I run my model on it to see where the overlap is. But this, folks, is an idea generation model and a ranking model, and they're not necessarily analysts at the firm. They're not going to run the portfolio for you, but it's a great idea generation list. We looked at price perfection. There's others, buy on a pullback. There's all kinds of things that if you really were managing money, that you would be grabbing these lists and running them through your model. So one other thing I want to mention before we wrap up, there's two things I want to mention. You started with a great demonstration of the world map. For folks that are more international, looking for data in other countries, I haven't seen, David, any service that has this level of data for this amount of companies worldwide. I'm a domestic investor primarily, but I'm just sharing, one of your strengths at your company is this worldwide data. Let me bring one other thing out that maybe we'll wrap up on, okay? So how do these ideas actually do? Does anyone keep track of them? Well, you guys have created indexes. You also, the one I remember when Carlos and MarketGrader first did the Barron's 400. This goes back more than 10 years already. And I'll give you a chance to toot your horn because the indexes have been pretty darn well.
You're right. MarketGrader, in addition to being a research house, is also an index provider. And we started providing these back in 2003 to test the rigor of our research. And after a number of years, I can say that roughly 91% of all of our indexes have outperformed their benchmarks, including the Barron's 400 and the Barron's 100, which is equally weighted in this case, but we also have a market cap weighted version as well.
Right.
So we have 70 indexes, Jordan.
All right, so let's go back. It's a dramatic story. Let's go back. If you can scroll to the bottom of your screen to stop sharing it so we can see each other a little bit bigger.
Sure.
There you go. And so, David, I want to just, thank you for the initial time on the show. But as we want to share with our listeners that MarketGrader has agreed to be a contributor not only to our shows ongoing, but also on the newsletter we're creating. And MarketGrader is going to be given an opportunity to highlight stock of the day, of the month, a screen of the month. But we're going to be getting input, guidance, and what you'll look to do, David, obviously, is we'll let you keep tooting your horn. We'll show the index numbers. We don't always expect, obviously, 90% to outperform, but you're in a pretty good spot. Come on our show, David, just to point out, and to come on our newsletter. We curate things pretty carefully. Everybody's handpicked. And MarketGraders, I came at you guys really early. I said, let me show you what we're going to do. And I'm glad you're participating in it. We look for your involvement. Carlos Diaz, really well known in the industry. And not only, David, I'm going to say one last thing. Not only do you have a GARP approach, growth at a discount, you also have a high quality quotient. And that goes with the companies you guys recommend and how you run your company. So thanks for being part of what we do.
Thank you, Jordan. It's certainly our pleasure, and we're very grateful to have been picked.
All righty. Well, it's WealthWise. It's Jordan Kimmel. I'm your host. We'll be right back with John Dobosz from Forbes, an old friend. We're also putting up some nice numbers with his newsletters. We'll be right back after a quick break.
Watch 13 Wham News anywhere on any device with Stir. Download the Stir app and choose Rochester. You get local news and more than 20 other TV channels. And the best part? It's free. Go to your app store and download Stir today.
And welcome back to WealthWise. It's Jordan Kimmel, your host, and this is an old friend of mine, a colleague, John Dobosz from Forbes magazine. And before we talk more, John, first of all, thanks so much for joining us.
Great to see your face, be able to talk to you, Jordan. We go back to the Bush administration, I do believe.
Yeah, man, we're going to talk about that. But John, you're currently doing 3 of Forbes' top newsletters. I follow them from afar. I keep watching them. There's actually a track record to them. Why don't you describe what the 3 are? And we could talk about some of our history, but what you're doing now is more interesting than the past.
You bet. I've been at Forbes for 23 years now. Time flies when you're having a lot of fun. And I have been. I've done a lot of things there. I write about investing, interviewed money managers, hedge fund managers, mutual fund managers, newsletter guys. You can learn a lot from them. It's like the Jimmy Buffett song, Pirate Looks at 40. I've read dozens of books about heroes and crooks and learned lots from both of their styles. I hope to be a hero. So I started out writing stuff at Forbes, been a financial journalist since 1994 at Inc. magazine, doing the Inc. 500. But right now, You said history wasn't interesting, Jordan. Come
No,
on.
I didn't say that. I
I
said
worked
we
at
love what you're
CNN.
doing
I
now.
met Lou Dobbs when he was still doing like journalism and stuff. Lou's a cool guy. But what I'm here to talk about today, the 3 newsletters I do are the Forbes Dividend Investor. I'm a value guy looking for stocks that trade historically cheaply. By that, I mean lower than average for the last 5-10 years on price to sales ratio, price to book value, price to earnings, trailing 12 months and future, EV to EBITDA, cash flow, cash flow that exceeds the dividend payout. And I rank them according to a model and put out a Forbes Dividend Investor portfolio every Friday with a little commentary about things that we add, things that we take out. I don't want to take things out of the portfolio. So we've got a yield of currently 5.29%, which is equal to what you can get on a 3-year treasury bill, but you're not going to have the chance for appreciation in a treasury bill. 3, 4, 5, 8, 10 years ago, when yields were negative maybe they are close to negative on a real basis now, when they were, people were starved for investment income and dividend stocks, as you know, Jordan, you're no stranger to this. They're the way to go. If you can ride out periods of volatility while you get paid to wait for the eventual realization by the market that, hey, this is a good company. You make out very well on the capital gain and along the way with the income that you earn.
Hey, John, John, let me say that, I've never seen a treasury bond raise their dividend, and I've never seen an inexpensive treasury bond get bought out because the valuation was good.
Followable.
So
right. You're exactly right. But I mean, if your only goal is to generate some income, treasury bonds are a gift right now. I think most people would agree, 5.3%, something like that, 5.25. So we do that, the dividend stocks. And then the second newsletter that we started in 2014, celebrating 10 years this past March, is the Forbes Premium Income Report. A lot of ETFs are popular now. The QYLD, that's the NASDAQ 100, and they write covered calls against the NASDAQ 100. And with all the volatility in the NASDAQ 100, most of it upside, fortunately, for people who are long the QQQ, the more volatility in an index or a stock, the more options premium that you earn. So you're collecting an 11% premium. I just checked before we came on. QYLD is still up about 7.5% year to date total return. So it's not smoking it like and the QQQ itself is up 13. So you're surrendering some upside for a high level of current income. And for many people, like I just described, and you just commented about the treasury bonds never raising their yield, and so you can get upside in the underlying security, and you can also get the current income.
Let's bring this into, but before we go to your next newsletter, I just want to point out, what a lot of our listeners and what professionals and investors look for is diversification. Would say a pie chart, and you want your growth, but you want something to stabilize it. And so if you could actually forget about year to date, John, if people can get a 7% total return in a safer part of their portfolio, you'd be surprised how many friends you make over the years as they compound with you. So the fact that something is not competing with the QQQ, it's a different world, it's a different asset.
QQQ has some off years, doesn't it, though? Right? I mean,
it certainly has.
So, actually, the XYLD, which writes covered calls on the S&P 500, has doubled in the last 10 years, which makes sense. If you get about a 7%, 8% annualized rule of 72, every 10 years it's going to double. So if you've already got a decent pot of money, even if you don't, it is a nice way to compound. So what I do with the premium income report, I use my own dividend stock ideas. We only put out about 25 to 30 stocks in the dividend newsletter. A lot of guys don't make the cut, but they're not bad stocks. And if you get them right before they pay a dividend, before the ex-dividend date, And before the earnings report, which will introduce a whole lot of volatility to the stock, you know, you can make out pretty well to the tune of about 4.5% to 6.5% over a 5-6 week period. That annualizes out nicely. You have some losers, and our track record, average annualized return from closed trades, has been 34.5% since 2014.
Come on, stop it, John.
Well, anyway, I gotta just let you know.
All right. Well, look, we know you're good. We know you're good.
Whatever.
We're not gonna worry, but
I'm not gonna throw numbers out and get the lawyers.
But here's what we're gonna do.
Well. I've got the track record.
Let's go back. We talked about a little history, and then we'll talk about going forward. I remember, John, over 20 years ago, climbing through windows with you on the Forbes roof.
With the video camera.
Shooting videos of the idea of the day. I mean, that's how far we go back. But here's what I want to do going forward. And you know, the history's been rich. It's been great. Your track record's been great. But what we're going to ask you to do is to talk to Forbes management. We would actually love you to become a contributor and come on more frequently. And I know you don't get an idea once in a while. You generate ideas every week and every month and run.
I've got black powder going off every moment of the day in the head. Yeah.
All right. So what we're going to do is we're going to have to keep it short for now, but we're going to have you on more often. And you know, one time to make it clear, you know, give them, this is not Forbes spelled differently. This is Forbes, folks. This is John Dobosz at Forbes. Why don't you give maybe a website or the name of the newsletter one more time?
Check out Forbes.com/dividends and Forbes.com/income. And you'll get to those two newsletters I just talked about, the Dividend Investor and the Premium Income Report.
Well, let's wrap it up here. It's great to see you again. I'm glad you're thriving, and nothing surprises me about your success and how hard you work.
We could have gone on, man, for another half hour here.
Well, no, we'll have it. We promise. Talk to Forbes. We'll have you on more, and we're looking forward to it. It's Jordan Kimmel from WealthWise. John Dobosz, so great to see you again.
You too, Jordan. It's always a pleasure to see you. Take care, my friend.
Thank you.
I want you to smash that like button.